And for the AFEX market update, now the last trading week, there was mixed performances across key indicators. We see turnover fell by 3.79%, closing the week at 2.03 billion naira from 7.2 billion in the previous trading week, while volumes traded witnessed a decline of 4.68%. A number of deals rose by 0.23%, closing at 158 from 156 points in the last trading week. The AFEX Commodities Index saw an increase of 0.01%, marginal increase, while the AFEX Export Index maintained at 229.25 points. To the volume of contracts traded, we see there was an increase in volume across cashew nut. Let's get a sense of price action now for export commodities. There was a mixed performance, with cashew nut rising by 0.55% and closing at 614 naira 30 kobo. Soybean rose about 20.06%, big jump there, closing at 428 naira. Cocoa also rose about 2%, closing at 2,800 naira, while wheat and sesame maintained at 440 naira and 124 naira 76 kobo, respectively. Sorghum, on the other hand, dropped by 2.80%. It closed at 353 naira 65 kobo. Alongside paddy rice, dropped by 3.93% and closed at 360 naira 27 kobo. I see ginger dropped by 9.21%, closed at 990 naira. But across the grain commodities now, maize saw a decline of 22.72% and closed at 340 naira 2 kobo per kilogram. All right, let's take the conversation forward. In the dynamic landscape of Nigeria's agricultural sector, the interplay between financing challenges and sustainable growth as critical focal points, and it's essential to understanding the key hurdles facing agricultural financing. Joining us for this conversation now is Bolu Olumide, Analyst, Strategy and Corporate Finance at AFEX. Great to have you on the show. Good morning.
Hi, Ladi. Good morning.
So talk to me about the key challenges right now in agricultural financing in Nigeria, and how do these challenges impact the growth and the sustainability of the sector?
Thank you very much for the question, Ladi. If you take a look at the agricultural sector, first off, you agree with me that the agricultural sector is a very key sector, both to the economy and to any country. Especially the share of credit allocation to the industry. What you then figure out is this has increased considerably compared to where it used to be about 8-10 years ago. And then, comparing this alongside other industries, especially the oil and gas industry, you see a drop in share of credit allocation, signifying the intensity of the government and the activities of the federal government in diversifying the economy and then the agricultural sector. Still a gap that is witnessed within the industry, and the reason are not far-fetched. For example, we know that the banks and other financial institutions are quite reluctant to directly invest in the agricultural sector. This, amongst many reasons, is linked to the presence of the volatility that is inherent within the industry. And then if you then take a step further to the rising cost of inputs, we know inflation has been on the rise, and then with inflation comes hikes in rates, and then yields currently are at their 14.6% on an average, compared to where it used to be a year ago at about 10-11%. So this shows increase in cost of capital, increase in inputs and in the cost of inputs, and then difficulty in accessing capital by some of these industry players. And then this has a direct effect on the output of farmers. Say, for example, a farmer who does roughly, a smallholder farmer who does roughly around on an average 10 acres would be expecting a yield of roughly 60 to 70 metric ton, give or take, with adequate financing. But when the access to capital is hampered, what you then see is a considerable drop in this output to their 40 30 metric tons thereabout. And then we've seen over time, if you check the trend, in contribution of agriculture to GDP, there's been really close to no increase at all. It even looks like it's decreasing. So these are the trends we've seen over time.
All right, give us a sense of the main sources of agricultural financing in Nigeria and how accessible they are to small-scale farmers and the agri and other agri-businesses.
Thank you for the question. From our experience, from data, we know and we can tell that certain players within the finance industry have been very key to unlocking capital to the agricultural sector, ranging from banks to microfinance institutions, to development finance institutions, private equity firms, and even government institutions. As much as there's this pool of fund, we must, point to the fact that there still exists the gap, in financing. And the reasons to these are not far-fetched. For example, one of such reasons is, the lack of education on the side of farmers, which then makes it quite difficult for them to access, complicated financial, instruments. A lot is being done across the industry. We at AFEX are, very keen on educating farmers, helping them with what is necessary to, accessing and unlocking this capital. And to also add, certain features have to be adopted, by industry players to make the journey to accessing capital very easy. One of such will be maintaining a very good credit record. That is very, very key to, attracting investors. Secondly, the availability of collateral, providing collaterals. And, in line with this, we at AFEX have, a few products that, enables this particular second point of mine. For example, the e-warehouse receipt, allows farmers to be able to, access capital by providing collateral. And then with the provision of collateral comes, a reduction in cost of input, and it's much easier to access, capital. And then finally, maintaining good books are very, very key and, very, very important to, unlocking and accessing capital. For example, in the crop production line within the agricultural industry, it is seen that EBITDA margin usually falls within the range of about 15% compared to the livestock production line, where EBITDA margin usually falls within 20 to 30% roughly. Because of this sensitivity in this margin for the crop production line, anyone in this line of business knows to pay attention to their operating cost, emphasize frugality, because much more can be done in managing your EBITDA margin than your gross margin, as it were. So presenting good books to proving a sustainable business is very, very key to showing that you are capable of managing funds when they are made allocated to you.
Busy at this time. Talk to us about the role of government policies and initiatives in supporting agricultural financing and development in Nigeria.
Sure, thank you. First of all, I would like to emphasize the fact that there's a need for a collaboration, more collaboration between the federal government and private institutions and other players within the agricultural industry. Over the years, we've seen some of these, we've seen some policies by the federal government rolled out, to stimulate activities in this sector, ranging from, for example, the Anchor Borers program to the National Agricultural, Land Development Authority, and amongst a few others that, have been done in the past. And then, for example, according to the CBN, the Anchor Borers program, as was reported by the CBN to have, created about 15 million more jobs and, cost about $2 billion reduction, in the food import bill. While this is a considerable landmark, and a commendable achievement on the side of the government, we must, state and emphasize how important it is for more of this kind of collaboration to happen. We want to see more of it in the industry and across board in order to further stimulate the industry and ensure food security in Nigeria and the African continent at large.
Right, we're all concerned about food security right now and hoping that we get as much security there. Thank you so much, Bolu Olumide, Analyst, Strategy and Corporate Finance at AFEX. Thank you.
Thank you, Ladi.
All right, that's how your money performed on the AFEX exchange. We'll take a moment now. When we come back, we'll head to other markets.